Welcome to the CC&A Insurance Brokers podcast. I'm your host, Candice Osborne, and today we are meeting with the Managing Director and Commercial Broker, Duncan Osborne, to chat about a very interesting and very bespoke product, which is very unique to CC&A Insurance Brokers, and it's called our self-funded personal lines insurance products. Welcome, Duncan.
Thank you, Candice.
So Duncan, can you give us a brief explanation of exactly what the self-funded product is all about?
We've developed this product really to give back to the client, and what you do get back is in terms of monetary funds, cash into your account every single month. And this has got nothing to do with whether you claim or not. It's just really a value add, because personal lines insurance is generally a grudge purchase, as seen by most. And we believe this is just really value, and it's really designed around the space of if you put a little bit of skin in the game in terms of taking different deductibles, and we have three points of deductibles, you get a certain percentage of your premium spend back every month. The minimum deductible, you would get 20%. We have a mid-tier, which you would get 30% back, and the higher tier, you would get 40% back on your spend every month.
What does that mean, get back?
It means that 20%, if you take the entry level excess, 20% of your spend will be put into interest bearing account for you every month, of which you will then get a statement showing your interest, showing your funds that are there. Okay,
is that money that you can utilize to fund excesses, or can it be used for anything?
Absolutely, you can fund it for, if you do have an excess, that money can be used for that. But not only, it is your money. You can draw it out within 24 hours. You just give us notice, and however much you want to draw, it's in your account the following day within 24 hours. So a lot of people use it as forced savings. A lot of people use it for their Christmas gifts at the end of the year, holidays, things like that. So it's your money to take out for anything. It doesn't have to be insurance related.
Okay. There are similar products available in the market. We see them on TV all the time. How does this type of product differ from, you hear sort of slogans like, if you don't claim, you get money back at the end of a certain period. How does this type of product differ from those?
Yes, Candice, it does differ completely, because we have direct insurers out there that have this sort of model where if you don't claim within 3 years, you get 10% of your premium spend back. This has got nothing to do with any claims. Whether you claim however many times you do or not, that 20% or the 30% or the 40% goes into your account every single month and can be drawn out within 24 hours notice. It's nothing to do with claims related.
So, Duncan, why should a person consider taking out this type of insurance? Why? Why would I take out this type of insurance?
Well, I'll go back a bit. I think insurers love the product because insurers hate it when there's a frequency of claims, the small claims of 2, 3, 4, 5 grand. They don't like that. It just means you're not managing your risk properly. And it's a good value back. It's not that you have to wait until you have no claims. Every single month you are getting a value back in the terms of funds going into an interest bearing account, which you can draw out within 24 hours.
Do you think that this type of product changes the attitude of the consumer in terms of insurance? Because like you did mention, insurance is a grudge purchase. Do you think that this type of product changes the attitude and mindset of insurance?
Yes, people see the value in it. I mean, we've got clients there that have got hundreds of thousands of rands sitting in their interest-bearing accounts, and we notice sometimes when they lose a cell phone or a laptop or whatever, and even let's say it doesn't even fall. It falls within that excess that you've chosen. They don't even draw the money out because they like it there in their account. So it gets rid of a lot of those frequency of claims, and you find that your premiums stay very, very much unaltered because the loss ratios are so good with insurers.
And do you find that it's a lot more attractive to insurers when you have, if you had to ring fence this type of product to insurers, does it make it more attractive to insurers?
Absolutely. As I mentioned earlier, insurers don't like frequency of claims when you're having a lot of claims of small amounts. An insurer will always step up if there's a genuine claim in terms of the severity of a claim, but this gets rid of those those frequency of claims. Insurers love it. They make a lot of money off it because they're not paying a lot of claims in the frequency market with the small claims. So yes, absolutely, and you don't get these jumps in insurance premium because of any claims. It keeps your loss ratios down.
So effectively, this type of product is actually going back to the nuts and bolts of what insurance is all about, which is you take out insurance to cover really catastrophe, and the day-to-day stuff you should really try and cover yourself, so it manages your risk better. Kind of like the way the medical aids went, where you cover your day-to-day expenses, and when you really need your medical aid, it caters for that, sort of along the same lines.
Yes, absolutely. But do remember that the excess option you choose, one of the three, it applies to every section of the policy, excluding Sastria, as that's a different insurer, and excludes any liability claims. But the excess is a flat excess, and it applies to every single section of your policy, be it your motor vehicles, be it your buildings or your homeowners or your contents or your all risk sections of your policy.
And the excess, is it a per incident or per section deductible or excess?
It's per incident.
So if there's let's say there's a fire and it's a building claim and there's a contents, you would have one.
You'd have one excess that applies
excess
to, because it's per incident, not per section, yes.
The other thing that always comes into the equation when there's motor is, kids under 25, license less than 2 years, all of those things. And those type of excesses can ratchet up very quickly, where there's a 5% and then there's an additional flat excess. Are all of those, you don't get any surprises at claim stage. Your excess is the flat excess from the onset, and that's it.
That is correct. The wonderful thing also is your majority of your policies, the deductibles on the motor are percentage based. You don't maybe 5% of claim minimum, 2.5 or 3,000 rand. If you're driving a R1 million car, that's suddenly a 50,000 rand excess with a 5% to it. This is a flat excess, which is a lot less than that. And you know what your excess is going to be. It won't be, cumulative excesses of underage, haven't had a license for this basic X6 single driver. It's just one flat excess.
So there's no surprises at claim stage.
Absolutely, yeah.
Is this product available across the market to any brokers, any insurers, or is it specifically just to CC&A? I mean, the concept sounds, it is out there, but in terms of the way that you've explained it, it sounds very unique.
It is unique, and it is unique to CC&A and to underwriters that have bought into the concept. I will also say at this point that it is more designed at a person that spends a little bit more money in terms of, I won't say at high net worth, but for example, if you are spending 5,000 rand a month on your personal insurance, you're generally going to get 1,000 rand back into your interest-bearing account every month. It could be 30 if you go for a higher, 30% if you go for a higher excess, or even up to 40% if you choose a higher excess. So some of the guys that have 5-6 cars on their policy, kids' cars, wives' cars, whoever, big house, all the rest, spend 10 grand. You can understand if they take the larger deductible and getting 40%. That's a lot of money going into your account every month.
Well, that's food for thought. I think the message here is very clear. You need to contact CC&A Insurance Brokers and request a quote for a self-funded insurance policy. Thank you, Duncan, for your time. It's been very interesting, very informative, and we look forward to many phone calls.
Thank you so much, Candice.
Thank you very much for joining us on this podcast today. Our contact details are below. Please follow us on all the various social medias. Have a great day.